Okay. Sunday, November 6th, 2016. Going to look over foreign exchanges, foreign indexes, and go through some intraday of domestic exchanges, indexes here. Okay, here's the Wilshire again. Up here, the purple area here, this is the ADX, and the ADX, that indicator tells you if you're in a trend or not. Usually it starts below 20 is the reset and continues to 40. If it should progress into the 60s, it's a persistent trend. Now this is an intraday 2-hour chart. ADX works well, also intraday, but with the daily is because you're looking if the breakout has room to run on it. Short term, as you can see, it is pressed, but since it's intraday, it can continue to trend higher. I'd follow it. You can use it short term, intraday to see if you get a hook if the daily is reset under 20 also. Here we have the S&P, same thing again, where you have the persistent trend here intraday, 2-hour chart down, basically the same thing. The intraday indicators are varied, but it doesn't mean it can't continue lower. NASDAQ, basically the same thing. Oscillators are down at the lows, but they can, like here, remain in an oversold situation. The ADX also is higher. But you also have, if you take a look here, possible minor short-term double bottom. Like I said, any move up in the indexes and that, I would look to find areas to short. This is the S&P 600. Basically, same thing. Went up and it hooked when we had the last hour when we rolled back over. Once again, anything on any bounce, I'd be interested in shorting. Mid cap, same thing again as the 600. Right now, you can see the washout on the red line, the unbalanced volume. So you basically had people at the end of the week on Friday. You can see the selling increase in here as prices went lower. Russell, same thing again with the ADX. The Russell had, like I mentioned, peaked out in 2015. Now we're up to monthly. Okay, this is a monthly TSX. Okay, so you basically have back in the 2000 period here. Then you had the commodity run, an unwinding, and then there was the leftover move in the commodities, the peak in gold and silver in that in 2011. I'm guessing that this here was the after of the real estate market. Okay, and then we had the bounce in the commodities since the beginning of the year, but I think we're going to head lower here. This is a monthly, so basically this is a 200-month moving average, which is forever, and then 15-month here. So these are, excuse me, kind of cyclical in nature here. Below it, above it, below it, and then sideways with the moving averages here. But I'm looking at it as, you have a whole bunch of highs on here and susceptible to persistent rollover here on the short side of Canada, just due to the fact real estate, and then if we get commodity prices, grains and that to roll over here into the spring of 2017. Amsterdam, here you can see a peak back in 2000, lower peak again. This has the looks of a bear flag. Who originally started all of this equity nonsense? The Dutch. All right. So they kind of things aren't working out here on the equity side of things here. Series of lowers, highs since 2000. Reminds me of pay wages for people, kind of the same way. A larger sideways pattern here. Australia, now this one, just like who's the other one? Russia, kind of looks like the same type of. This has the same look. Australia has the same look as Oil did before it rolled over from 108 down. Okay, so in a sense here with Australia, they'd probably be susceptible to a global recession over the next couple of years. You do have a nice move in coal prices. It's not just one thing. You know, it's not just oil for Saudi Arabia. You still have to manage your finances and things of that nature. They also had the real estate boom, things of that nature too. So I would, just like with Canada, that they would be susceptible to a pullback in equity prices with their real estate and softness in the commodity sector. And this is the secular run in commodities. And so this is the aftermath. Belgium, basically the same things as the Dutch. Higher high, never really joined in. Remember Belgium and things of that nature, they have Budweiser, you know, they own the brands now. Okay. But here it just doesn't look like, doesn't look too promising for the bulls, Belgium. Here is Brazil. So this is post-Olympics. Okay, they have had a decent amount of inflation, which typically helps equities because more money, right? Inflation, okay, that type of thing. But they also are susceptible to the post-Olympic. It seems like everybody has Olympics. It really doesn't work out. Montreal and Sarajevo, and then Russia. On and on and on. They spend a lot of money. It's short-lived, years of growth, and then the weeds take over, kind of deal. So I can't see Brazil continuing higher. I think this is just a larger distribution pattern. Also, don't forget South America also has its issues too with inflation and debt repayment and things of that nature. The CAC, same thing, from 2000, series of lower highs for the cycles. Can't see much here. It does look like a bear flag, so I'd be susceptible to the CAC going lower. Also, just like with the NASDAQ, continuing lower. Germany, this also looks like here on a monthly, this does look like somewhat of a bear flag. This trend line should work out, or trend line, this moving average should work out for you, and that's a 50-month. Okay, and it is a logged chart, so these will be pretty deep percentage-wise. But you had, they broke out, they had a retest here, went higher, and kind of losing the momentum. So I would think that anything under 10,000 here on the NASDAQ, and things will pick up on the downside. What is that, 1050? So what is that, 800 points lower? So what's that, 8%? Yeah. Then things will pick up. What's the downside of this flag? 75. So that's about a quarter, a little more than a quarter, third. If it sticks in cloud here, I'd use this one as a first stopping point. But it does just look kind of like a bear flag here with the DAX. And Dow Jones World Index, we've looked at this a couple of times. This is just a different format. High, recession, high, recession. A lot of grinding here, and it just does not look like it can hold it together here. This is a world growth, all the way from Stone Age, water, power, coal, oil, nuke, here's where we're at. Now we're up to battery, that kind of thing. So we may be needing some sort of new technology to get it in gear. Everything's in the cloud now. So what's that mean? No books, no, how it goes. A lot of value we create out of thin air, basically, but that just does not look healthy. European 100, same thing, high in 2000, didn't make it again. Now here we are. If I looked at this and didn't know anything more, I would say that these lows aren't going to last. So that would be an issue for Europe, obviously. Oh, this is a nice little reversal bar here. You have the Brits Okay, so if the currency devalued and the stock market took off, now the currency is appreciating and stocks are coming off. But this, high, tried to get out, couldn't get it, pull back. Oh, the FTSE looks like it's going to come down from 7,000 to 5,000, 20%, 30%. Even coming down to the middle of down to here is a 30% drop, right? 5,000, roughly, yeah. 25, 27, 28% drop on the FTSE off the high. Hong Kong, talked about that before, was being a short some time back. Chinese mainland stocks are trading in Hong Kong. I just think it's a large piece of distribution. Hong Kong real estate, expensive, land, that kind of deal. So I think they'd be susceptible. What's this down here? 13,000 from 24. So it's about a third too. So you see, I just eyeball it quick. Fail to come high. You assume it's going to come through here. Well, obviously, then those aren't going to hold, and we'll try down in here, which is a third. So I'm being kind of nice about it. Here's Italy. They are on the radar to join the old Greece, Spain, Portugal looking deal here. Italy, for the most bullish scenario here, I guess you could use this as a double bottom and then an inverted head and shoulders here with a neckline. For Italy, yes, they had the earthquakes, and that should help with some of the economic side of things. It's unfortunate, but that's that. Not much you can do about it. So rebuilding and stuff should help, but unplanned. You don't wake up one day and go, I want a new house, and knock it to the ground. But Italy should have some growth just due to that. And it's unfortunate, like I said, with the earthquakes, but that's Mother Nature for you. And we seem to keep having them, so I'm a little nervous about anything. An earthquake, which breaks out to a volcano, which disrupts airline services, which disrupts, you're going to have problems with ships, all kinds of it unforeseen, as they say. And the key here is the persistence. Mexico, okay, so one's going to assume then that it's Mexican peso is just it's going to cause some consternation to folks. I'm going to assume that the Mexican stock market's not going to like it either. I like the short side of the Mexican stock market here. Where's our transition period here? 2007 and 8. We got to bounce higher. That's 16,000, 49,000. Same thing with the whole inflation deal that Brazil had, your emerging markets and stuff. But I think that's the end of the line there for Mexico. I want to see how many more are left here. All right, Euronext 100. This looks like a platform here before it drops further. 8 to 6. We're talking 20-30%, just a third or more off the highs, even just with the next leg down. I'm going to poke at this Mexico real quick here and unlog it to see where we're at. Okay, so that's Mexico, folks. All right. I bet you there's divergences and stuff there too. Weekly, see what she looks like. All right, double top hooks up here. Yeah. Okay, so what we have here is we have a long, this is a weekly chart, so this is going back to 2012. High, basically highs. Broke out, retest, came up. If we come back in, we're going to blast through the bottom. So we're going to go from 46 to 39 in a hurry on the Mexican index here, the bulls. And third page here. Same thing along the lines here with the Nifty. Possible double top here. They've had a heck of a run too, from 920. So we're talking 10 times on here. Logged chart. So basically, I'm looking at it as a double top, pullback. So everything looks like it's really going to lose at least a third here. And Japan used to be one, if the rest of the world was going to fall apart, I'd want to buy it. The same thing, you know, somewhat looking of a bear flag possibility coming back down. This moving average here, 12,000, it's at 17 now and high of 20. So that's more of like a 40% drop from the highs. In New Zealand, we talked about this in the prior video that I did on these some time back, maybe a couple of months or so. I sent something out about shorting this, so I'd continue to stay short on this one. It's had a really good run from the bottom, but compared to Australia, I think this one is going to have some issues here. Looks like around 5,600 or so is down in this area. And Portugal, one of the few that if I had to throw money at something that I thought was cheap, Portugal would be it, just due to the fact of how the chart looks. It's just a lot of time going on just chop, 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 chop. So I prefer the long side on here. It wouldn't take much to turn it, basically. I could just say anything under 5,000 buy on Portugal. So if I had to do if I was an employee in Portugal and I had an opportunity to buy my, country stock market, I would be doing the, drip type deal in Portugal. I'll have to come back to those. And then here's Russia. Okay, so Russia, just like we saw with Australia, this is when Russia defaulted on its debt. So let's look at some big numbers here. 570 to 40. All right, any way you want to slice it, this is just a horror show in itself. And then we had the secular cycle in commodities. The unwind assets, well, I'm not sure of the dates on there, but assets changed hands. Oil fell apart. Russia went into a recession. But I think that there's going to be more to the downside here. So, like I said, 570 to 40 in like a year and change. Okay, so Russia, even though you sit here and you look at the chart and you start drawing lines and you're like, oh, 1,000 to 500, 400, 300, 200. It's happened in the past. It can do it again. Here's 2,500 to 400. That's 75% off. We'll also take 75% off of here. 1,500 be 600. From the high up in here. This does look like a wave forward. We're going to come lower in Russia. China, same thing. The run up in the economy, our debt, things of that nature. The unwind of the commodity cycle, a bounce on their part. They had a bounce on their part, and it was a hard sell-off. Now we have the whole Bitcoin thing going bonkers. Funds flying out of there. The Vancouver real estate. On and on and on and on. And I can see this coming back down to the 1,000 level. So this would be like losing half to 2/3. Okay, so down to here. I just be nice about it. 1,000 to 1,200 from here. Singapore was one we looked at as a short on here also. Paul Tudor Jones, I think, closed down or fired people or something of his fund out that away. So I'm going to assume it would be susceptible to a drop here. So looks like it'll be cut in half. Singapore. So a lot of these they don't look healthy. We need to hurry up and just rattle cages and shake the tree. Things of that nature to get this over with. What do I want? How about a weekly? Whoops. Is it going to give me that? Yeah, it does. Weekly. It looks like a double top here in the Nifty. Okay. And I think that that's it for now for here. But for right now, remember daylight savings time. Futures or currencies are open. And looks like the dollar is stronger with U.S. yen, and the pound is. Where'd my data go? Where's my data? No, I don't want to talk to you. Okay, what do I have here? 110.5, 110.50 on the euro, 104.31 on the yen, 124.40 on the pound. U.S. Swiss 97.76, Aussie Aussie 76.84, CAD 133.34, Kiwi 73.42, and Mexico 18.62. I think that's that for now, right? What else do I have? Those most popular. Those would be the most popular. All right. There you have it. Market soon to open for the Sunday evening.